Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, it's been largely flat when it comes to the benchmark indices at this point in time. The Nifty is hovering at around 23,730, just about 0.04% lower in trade. The Nifty Bank is slightly better, 50,474, and you can see a 0.6% surge. So the banks are in fine shape, but what is even better is the broader markets. The mid and the small caps are clearly outperforming today. Look at how the small caps are actually driving the show today, almost 2% higher. It's one of the best performing indices today. You also have the mid caps, that's up by 0.8%, but that's where the large action in the markets is. As far as the key sectors are concerned, media stocks are doing well today, over 2% of an uptick. You can see oil and gas that's driving the show, 1.6% higher. Largely the commodities, oil and gas, metals, those are the thick shapes, thick places where all the action is today. Now, when we look at the banks particularly, PSU banks are actually doing good, over 1% gains for this one. Then you also have the private banks that are about 0.5% higher, financial services about 0.3%. Pharma, IT and auto, slight gains can be seen. What's not doing well? You have the realty stocks that are giving up some of the gains of the last few days. 1.7% lower for the real estate index. FMCG and consumer durables are also giving up some of the last few days gains as well. Now, when we talk about the PSU space particularly, again, it's the oil and gas related stocks. You also have the OMCs, upstream companies doing well. Then you also have some stocks like REC, PFC from the Power Pack, Coal India, these are the stocks that are doing well. There's another pocket that is actually in action today, and that's the capital markets related stocks. Look at Angel One. It's also the top mover in the F&O space today, 7% higher. Not just that, even CAMS also along with it is doing well. K Fintech is doing well. Motilal Oswal Financial Services. These are all the pockets where in fact more and more interest of investors is being seen at this point in time. What's not doing well? F&O space, if you look at the top drag today, well, you have Torrent Power, then you have even United Breweries, you have Godrej Properties, you have Asian Paints post the disappointing earnings. Even Titan is slipping away at this point in time. So that's as far as the large action is, and now we are drifting lower to 23,700 mark, 38 points lower in trade. Let's see how this progresses over the last half an hour. But let's welcome our guest on board. We have Mr. Sunil Shah, Fund Manager at SRE PMS. Warm welcome to you, and thank you so much for taking the time out and joining us. You know, a lot is at as key factors that investors are considering at this point in time. So I'll take a bird's eye view from you first. As to how should one look at the market setup right now. Domestically, one of the biggest events is already out of the way, budget. We have the next one coming in, that's the RBI policy. The meeting starts today, and Friday is when we get to the policy decision. There is an expectation that rate cut of probably 25 basis points can happen, but there is still about a 60-40 chance as far as some of the economists are pointing out. Then of course there is this overhang of how global cues are shaping up because of Trump tariff news, geopolitical uncertainties. A lot of commodities are also doing haywire at this point in time. How are you navigating through all these factors at this current stage, and what are you doing with the fresh investments, sir?
Yes, thank you very much for getting me on the show. Let's look at understand the situation right now. Budget, which has been a recent event which has gone by, and the way in which FIs are looking at this event is
Yeah.
the roadmap which has been given. Meaning, what is deterring the FIs to invest in India is the rating that we have as a country. And our rating has been static at for almost 2 decades now, despite the kind of growth that we have shown. And because our rating is at this level, their allocation from FI cannot increase beyond a certain percentage. So what is most important happened in the budget is the roadmap which the finance minister has cowed out about reduction of debt, from 57% to 50% in the next 6 years. So that, to my mind, is a super thing to happen from an FI standpoint, which can increase their allocation eventually. Because if we are the way in which we have managed the fiscal deficit, so there is lot of expectation that the finance minister will also work towards reduction of debt. And if debt is reduced, rating can be upgraded. And if the upgradation happens, then FII flows will increase. That will really be the way forward. So currently, what is disturbing is that out of our total revenue, 25% is going towards interest payment. And this is something which, rating agencies, everybody is unhappy about. So if we target all those things of reduction of debt, I think FII flows will be there. eventually which will come into the market because India has clearly proven in the world that we are the fastest growing economy and money has to come here. So it's just question of time before which will happen. So that's one part of the story. Domestically, they have really reignited the animal spirits on consumption because now you have a tax-free income in the hands of people to the extent of 12 lakh rupees. So lot of consumption-related activity has to pick up. And we will see all of that translate into numbers of the corporates from the second quarter of next financial year. So we are going through a lull right now. And I think consumption basket will then start picking up. That's where, opportunities will crop up. So the shift will happen from infra and government policy driven in the last 3, 4 years and move towards consumption opportunities. So that's the key thing which will happen in the next 6 months, and that is where portfolio position should happen. So that's the thought process with which we are maneuvering this market right now, Sakshi. That's the thought process.
Right. Mr. Shah, let's get down to some of the other points that are important to also discuss in the current setup in the markets. Of course, the ones that you highlighted as a context is, of course, where we are navigating through. But, if one has to really look at what are the key data points that one should track to gauge the current situation and how things will be back, how would you really look at some of those factors, sir?
Yeah. So one important point of data that we can track is, where are we in the markets?
Yeah.
So we've taken a universe of almost about 4,800 stocks which are trading, and we have mapped out their 52-week high price and their 52-week low price. So just to summarize this entire working that we have done, let's say the 52-week high price was 100 rupees and the 52-week low price was 50 rupees. Currently, most of them are trading at about 70 rupees or so. So that's the broader picture of the market. You are away from the highs, but you are not very close to the lows as well. Now, within this, the portfolio repositioning has to happen. That is, if there are consumption stocks which are lying in this range of price between 50 to 70 as a percentage, maybe you can start accumulating those stocks and infra pack or the defense pack or the railway pack, etc., renewable energy pack, which could be trading at between 80 to 100 rupees, which is closer to their high prices. Maybe you can switch from that into the consumption space. So this is a very simple data point, broader terms observing how the market is. But if we are able to gauge this and understand, then maybe you end up buying stocks at the low end of the valuation discounting as well. So that's how I think one can position and understand the market. It's a simple data point which I thought I will share with you since you asked that.
Fair
Yes,
point,
Sakshi.
fair point. Absolutely. Let's also, discuss the other aspects as well. We were discussing about the budget. One of the key, announcements in the budget, or the biggest headline, has been the tax bonanza, up to 12 lakh rupees, no tax. Now, one aspect is that we are hoping that this will come to the economy by way of consumption, increased spending, and that could get the ball rolling as far as the economy is concerned. I want to first understand from you, how big do you assess this 1 lakh crore rupee figure will be in moving the needle as far as consumption is concerned?
Wow, great question. This let's in economics there is one concept which is the multiplier impact. Which is about money moving from one hand to another, and that really kickstarts the economy big time. So this incentive of 1 lakh crore, even if we take a multiplier of about 0.16 or 0.15, it rotates about 5 to 6 times over a period of time, and that unleashes about 6 to 7 lakh crores worth of economic activity. And our GDP, which is at about 350 lakh crores, this translates to a 2% momentum in the economy. So that, to my mind, is a big number, and consumption has been an ignored pocket, so-called ignored pocket from the government standpoint. So clearly, 2% momentum is going to be a big thing purely out of this 1 lakh crore. The second point is that practically, if we understand, there is this Indian psyche, Indian mentality of paying taxes to the extent required. So maybe in the next year, we will see a huge bump up from the 7 lakh slab, people moving to the 12 lakh slab. And so that 5 lakh rupees of extra incremental will flow in the economy. So that will kickstart another growth rate. So there are two components directly 1 lakh crore. And again, once the 7 lakh is moved in the economy, government will collect about a GST from that pocket itself. So
Fair
money
point.
will come back to the government in GST terms as well as the unleashing of that unaccounted money. So both these things will really kickstart, and that's how I think it will play out overall for the country.
So, basis this, which are the key sectors that you will bet big on, where the impact can actually be seen, and therefore we could start seeing a reflection in the stock markets?
Yeah, so I think broader terms there could be two, three pockets. First, clearly is the consumption side. So we can talk about people who save a lakh of rupees and they go about buying a two-wheeler, for instance. So auto, consumable durables, FMCG will be the direct beneficiary from this. The second pocket could be the spend could get transmitted to the tourism part of it. So there will be hotels, aviations, all of those could really be the pocket where it will be moving. And the third is obviously the incremental savings. So if people intend to save this money which has come in their hands, it will move to the AMC business, the wealth management companies. So whole host of consumption, whether it is your QSRs or whether it is those food delivery online systems, all of those would be the beneficiary of this, a lakh of rupees of savings, because there's a big market there, and the number of people as well is going to be huge. So if you look at the broader numbers, in India, we have more than 110 crore people who fall below the income threshold of 12 lakh rupees. So that's a big number, and the consumption from them will increase, which will go into various sectors. So it's manufacturing, services, as well as financialization or savings on that side. So whole host of sectors can benefit from this. Is the thought process which I have right now.
Okay, got that. Let's also focus on some of the other aspects then, and try and understand from the retail investors, perspective as well. When we look at the key stock ideas, what would those be? Are there any fresh ideas that are coming in front in the recent volatile or the decline that we've seen in the markets last 4 months odd? Have any pockets started to emerge more attractive to you valuation wise, or are you looking at the prices and believing that this is the right time to take an entry? Any key stocks that have come on top of your radar, sir?
Yeah, clearly, I think market will be driven more by those large cap opportunities. There is absolute value visible in the likes of HDFC Bank and State Bank of India. Both are leaders in their own space, whether it's a private or the public sector pocket. So I think money, when it gets transmitted in the banking channel, these two companies clearly offer a lot of opportunities. If I look at my valuation feeder, Bajaj Finance and Bajaj Finserv stand out over there. They are really trading at low end of the valuation despite the growth that they are showing. So
Yeah,
that
in
can
fact,
be
Bajaj
another.
Finance is up what 33% already in the last couple of months. Would you still be bullish
Yes.
on it?
Yes, we would. I think still there is room left there. So I think maybe at a price of closer to 9,000 rupees is where the fair valuation for Bajaj Finance will emerge out. So the upside could be limited from here, but clearly it calls for a value pick even at this price of maybe close to 8,500 or so. So returns would be limited, but yes, it's still coming in the value zone for Bajaj Finance. Moving on to the results, I think Wari Energies posted an excellent set of numbers, and the kind of growth that they are envisaging over the next couple of years of close to 50,000 crores of order book clearly is the case in point where investors can invest. The only caveat is that the lock-in period of investors in the pre-IPO comes to an end by almost April end or so. So at that point in time, we could see selling come in, and that is where maybe investors can look at investing into Wari Energy. So that's what I think. It's a good basket of safe large cap value based and great growth oriented companies like Wari Energy. So it's a combination that we need to play in this market right now.
Okay. So banking, financials, some of the renewable energy spaces, these are the key stocks that you've picked up. Let's also discuss a few more sectors. Consumption story when we talk about, some of those you already mentioned. One of the most, you know, close day-to-day contact that people have these days is with quick commerce when it comes to consumption. So I want to understand what is your thought there. We have two major players that are listed right now, Zomato and Swiggy. The erstwhile DMart and those which used to deal with only offline stores have largely been seen on a back foot because they have not jumped on the bandwagon of quick delivery. But how are you looking at the opportunity here? Both valuation wise, we know that it's an interesting model. We know that people are using it on a day to day basis. We also know that the companies are not yet profitable. There are concerns on heavy cash outflow and on expansion at this point in time. So, how should a retail investor really look at these opportunities?
Yeah, great question. You know what? As I stated, close to 5,000 companies are there in the market. And out of that 5,000 companies, if you pick up the pack of 5 lakh crore market cap plus, with companies which are excess of 5 lakh crores, you will have just about 8 or 10 companies. The likes of, Reliance, TCS, HDFC Bank, Hindustan Lever, ITC, SBI, LIC, all those. And one factor common amongst all this beautiful 5 lakh crore club is the number of customers that they have. So Reliance would have upwards of 45 crore customers. SBI would have 45 crore bank account. LIC would have 30 crore, users of their policies. Then you have Hindustan Lever, crores of people use the product. ITC also similar thing. So the point which I want to make is, if you are in that elite club of 5 lakh crore, you need to have a profitable business model which is catering to crores of customers. And I think Swiggy and Zomato, both of them fall in that line where maybe today they are catering to few metro cities and capital cities, but eventually that will flow to the tier two cities as well. And that's when their base will be absolutely something similar to the likes of Reliance or an ITC. So that is what maybe market is trying to factor in now and discount it well in advance. Of course, the operating leverage has to play in sooner or later. So it is this kind of ideas are for the brave heart. These are for the long-term investors. This kind of ideas are for people who can fathom volatility. So this is the thought process which I have on this, quick commerce or Swiggy, Zomatos or food delivery portals. They have a model. The only thing is operating leverage has to play out and it has to become profitable. Then we will see the next leg of growth in the market cap, which will take them to the next level as well. So I would compare it with those established, proven, branded, large cap companies and compare it to this on their similar kind of customer based model of growth. So that's the thought process which I have on those kind of companies right now.
Point. When we also look at the RBI policy upcoming, which I mentioned in my opening comments, how are you looking at the scenario emerge there? Which are the key sectors that will be first to react positively, and where would you be seeing trickle effects coming in first if the rate cut is announced as planned?
Yeah, so now post budget, everything is moving from the finance ministries to the monetary policies, right? The fiscal is in place now, and it has its role to play. 25 bips is the bare minimum which can be expected to be cut, can be expected from the RBI governor, which is very much going to be there. And that would kickstart huge amount of momentum on the personal finances. We are seeing currently stress on the microfinance as well. So for me, I think gold finance will be one such pocket of opportunity which will be there for us to take advantage of this entire rollout in the NBFC as well as in the microfinance and the banking space. For me, gold finance companies would be one of the pockets to watch out for. Again, if the rate cut transpires, then obviously there will be infra companies which are there, which have huge order book on their plate right now. And if the rate cut comes in, they stand to benefit. You also have space of public sector banks, wherein I think State Bank of India and Bank of Baroda seem to be the two ones which I like, which I think will be the big beneficiary from this entire rate cut. So it's an ancillary thing to the thing which has happened in the budget. And that is what I think will really gain the momentum even in the markets to really revive the economy on the capital expenditure as well as on the infra side of the business. So those are the things which can happen because of the rate cut. Yeah, Sakshi.
Right. Also, Mr. Shah, just wanted to get a sense, the capital markets related stocks are again buzzing in trade. This has been an erstwhile favorite pocket too. It's also created a lot of wealth for investors in the last year, 2024. But again, the question comes in for those who have missed the best part of the rally in 2024. Can they continue to invest even at these levels on stocks like BSE or a CDSL, maybe a Motilal Oswal or a K Fintech for that instance, the entire basket of brokerage houses that are improving, AMCs. How are you looking at the opportunity there?
Yeah, opportunity remains to be tremendous. I think I would try to play the duopoly pocket there. So you have Cans and Kfin as the two stock idea which is there. Now in this budget, there was also an announcement about centralization of the KYC. So if that has to happen, there could be impact on Keynes for sure. And that has also played out in the market because the stock, which was trading at closer to 5,000 rupees, had corrected way below 3,500 or so. So the correction was very sharp. The growth is very much intact. CAMS has also played a big role in terms of the dematization of the insurance policies. So that's another pocket which can open up apart from the entire mutual fund business which they are doing. And we still have, the number of demat account is about 18 crores, but we have more than 30 crore insurance policies. So that's going to be even bigger business for CAMS, I think. So CAMS can be one such clear stock of this entire financialization theme. In comparison for BSE or NSE, I think BSE is really richly valued. Maybe it is trading at a valuation of almost three times of that of NSE. So we would perhaps give a pass to BSE because of the very, very high valuation at which it is quoting. Again, if we look at CDSL and NSDL, NSDL is certainly not listed right now, but CDSL also can be a big beneficiary of this entire multi-product dematization, which means today you have only stocks which are in the demat form, and as I stated for CANs, insurance policies can also be a structure for CDSL. So CDSL also offers value at this price and can be certainly looked at. So entire thing, yes, as far as broking is concerned, a broking business is getting shifted more towards the online platform, and it's very, very highly competitive business. So margins are going to be thin and more thinner in future. So we would pass out even the broking business to that matter, and you just focus on maybe companies like CDSL and CANS in this entire pack of financialization. That's the way we would look at it.
Okay, understood. Let's again look at, you did point out that large caps is where you would find more opportunities now. And that's been a larger consensus as well, because it was the mid and the small caps that rallied very sharply, and large caps are catching up now. But despite, say, a 15-17% correction from the top for the mid and the small caps, is there enough froth that has been taken out? Is there some more froth that needs to be taken out? What is the approach that one should have to mid and small caps? Why I'm asking you this is, large part of retail investors' portfolios are skewed toward this pocket, and this has been, whenever the markets have corrected, these are the pockets that are most vulnerable to get into deeper correction. What's your own sense here, sir?
Yeah, Shakti, the way in which market have behaved after COVID, pre-COVID, we had Sensex of 42,000. And that Sensex corrected to 27,000. And from that levels, it has become almost 3x. So the broader perception of the retail investor is that market has given 3x return in a 4-year period. And that has been for the large cap universe of Sensex. But if you look at mid and small caps, portfolios have become 5x to 6x in a 4-year period. The wrong thing in the mind of the retail investor is that this is the way market behaves. The fact of the matter is that it has been an abnormal period of growth, and that is unlikely to sustain going forward. So the retail investor has to temper down the expectations. Maybe in the next 5 years, we will see the broader markets double, and a portfolio of quality stocks could be 2.5 times or so thereabout in a 5-year period. So 3x in a 4-year was a misnomer, was an abnormal period. The normal run rate is like a 2x in a 4-year or a 5-year period. That's the thought process with which retail investors should come in the market. Post the December results, retail investors can look at their set of companies, see how the growth is panning out for them. It's a very simple exercise to do is just look at the result numbers and see the growth which has come in. Don't even try to gauge the future. But if the growth is slowing down, then the multiple compression is certainly going to happen. Meaning people are paying price at a multiple of 60, 70 for a growth which is about 20% or so. This will not stay because at a 20% growth, you have large cap companies available at a discounting of 20 or 25 times. So that's where the flow of money will get channelized, and those mid caps and small caps which have had their run might not deliver. So it is better that retail investor awakes up right now rather than be more hopeful on generating this returns into the future. So that's a very cautious thing that I would advise the investors and retail investors to specifically be aware about. That's the way I would say that. Yeah.
Absolutely. Last 5 minutes remaining. I'll just quickly check how the markets are doing at this point in time. It's the small caps showing very well, 1.9% higher. And within this space, again, it's those capital markets related stocks that are doing very well. You also have Affle India that's jumped about 8%. You have Credit Access Grameen that's up 6.5%. Redington Perso Solutions, 361 WAM, ITI, some of those PSU names that are buzzing, Tata Tele. You also have MTNL in the morning that it was up and about. Even this one is up within the telecom space. Then you have the metals that are shining bright today, 1.5% higher. You have Hindustan Zinc, Hindalco, Ratnamani Metals, Hindustan Copper, all of them buzzing. Then within the PSU banks also, some of the names were mentioned by Mr. Shah as well. SBI, apart from this, you have Union Bank, Indian Overseas, Bank of Baroda, Can Bank, all of them buzzing in trade as far as the banking names are also concerned. Then you have some pharma names also catching some breath today. You have Abbott India 6.7% higher. This largely after steady set of numbers that have come in from the company. Biocon up 5%, Natco Pharma, Lupin, Glenmark. That's the space that is also garnering some traction. Let me ask you on this, Mr. Shah. IT and pharma, the two pockets that we see are as export-oriented names and probably the ones that are probably more vulnerable than the other sectors if there is anything negative that comes out from the US when it comes to tariff news or anything that could disrupt the operations or cause some kind of a negativity for these two sectors. What should your approach be on these two sectors as a retail investor now?
Yeah, clearly fortunes of this pocket of IT and pharma is linked to the global environment. And we all can clearly see the writing on the wall in terms of how finical or how scary the global environment will be with Mr. Trump coming to power. There will be a clear case which we have seen recently in terms of arm twisting, Canada and Mexico, in terms of tariffs and then giving them a leeway. When Mr. Modi is going to meet up with Mr. Trump, we will clearly see some kind of arm twisting from Mr. Trump's side as well, which could be an impact on IT and pharma for sure. Uh, yes, Mr. Modi, being the expert that he is, will use this platform to perhaps create a mindset in US's mind about us being an alternate to China, and we take it up as an opportunity. But yes, IT and pharma, to my mind, will be clearly underweight from an individual portfolio because of the headwinds, because of the challenges, and it's better to move to something else rather than make a hopeful trade. So that's what I would recommend advise. Again, IT as a sector is now growing at a very single digit. Your large cap companies just demonstrating a growth of between 8 to 10 or 12%. And the premium at which they are quoting at is still higher. So that's the pocket which, we can shift to something else like a capital goods, like a consumption, like a auto, like a consumer durable. So that's the strategy one has to play, looking at the headwinds for the sector right now. So we would like to follow this mindset and act accordingly.
Fair point, Mr. Shah. It's been a pleasure to host you on Business Today and get all these wonderful insights on the markets and the outlook. Hope to see you again very soon to explain to all our viewers how is it to understand the current setup and what are the moving parts that one should keep in mind when one invests in the current market. So thank you so much. Appreciate your time.
Thank you. Thank you.
23,690 right now on the Nifty. We are 50 points lower in trade, so we've drifted a bit lower again, and we are 0.2% lower in the trade and slip below that 23,700 mark. But it's the broader markets that are definitely stealing the show. Mid and small caps particularly almost 2% higher. Metals, oil and gas, PSU banks, pharma pack. Even the banking space is up and about, IT slight gains, but realty, FMCG and auto, these have slipped, and even the consumer durables. Interestingly, these are the pockets which are the interest rate sensitives, and as we inch closer to the RBI's policy, these are the pockets that will be more important to watch out for all our viewers to see as a reaction what it comes as far as the expectations go on the rate cut front. So that's as far as the markets go. We'll wrap it up at that, viewers, but do stay tuned on to Business Today Television as we continue to get you all the insights around markets and around earnings, as well as the post-budget analysis that continues, and of course exclusive excerpts from BT Budget Roundtable from yesterday's big event that we had, where the finance minister broke down for you what her vision was as far as when she presented the budget 2025-2026, and of course the decoding of the budget fine print with all the top experts in chunks that you can watch over all through the day today and in the next coming days as well. Stay tuned.